Hi everyone, this is Rob Roy of Elliott Wave Options, and welcome to this trade review of our recently closed trade ID number 158 on WMB. It was in our impulse strategy. It was a straight call, and as you can see, we were in the trade only 8 days and returned just under a 40% return on capital. To look at the particulars on our entry, we were looking at a wave 5 buy in the Elliott wave pattern, meaning we had completed a 5-wave pattern to the downside, and normally that requires a retracement back to the previous 4. So that gave us our target price around 25. Now, as you can see on the exit, when we exited the position, we didn't quite make it all the way back to where the previous 5 was, but the reasoning for that is that we had gotten to the point where we were overbought short term, and one of our confirming indicators, Chalkin Money Flow, was not confirming the upward move. It was still to the negative side. Now, another note that I wanted to make on this is the fact that if you look at the money flow, you could make an argument that, well, you're starting to see divergence here, which is one of the things that Chalkin Money Flow is used for. Divergence is not just whether the money flow is positive or negative. And so you could look at this move and say, okay, we're moving to the upside and we've got some divergence here, but that's not divergence. That's actually confirmation, moving to the upside with money flow being less negative. So there's a difference between being positive and less negative. And if we were to go ahead and forward this to where we are now, you can see that we've turned around and headed back down. Now, there still is a possibility that we move back to that previous 4 at some point, but when we also take into account the fact that we've been on one heck of a run in the market and we're nearing a 100% extension in the wave 5, we're looking at a doji at the time that we exited this position, the prudent thing is to go ahead, let's take a gain. And that's the final thought that I wanted to leave here, is that taking the bigger picture into play is one of the aspects of Elliott wave. And so when you're on a big run in the market, you've had a long extended upward move and you have a bullish trade, the prudent thing to do is to take shorter term gains, not let them run as much as you normally would. I hope you found that informative. Look forward to talking to you again next time. Take care, everybody.